Well, they say if you can't beat them, join them. Today I'm introducing not one, but two Canadian gold stocks to my channel. My name is Cameron. You're watching Common Sense Investing. Let's get started. The markets haven't been great in 2025. Tariffs have created some chaos. Portfolios are down. Bubbles are being popped. I use these opportunities to research stocks, looking for undervalued sectors or companies. This led me looking into some gold stocks. As we all know, gold has performed stunningly this year, rising 25%, its best performance in 14 years. However, when I checked into it, gold mining stocks didn't quite keep up the pace with gold. So gold has been going up, gold mining stocks have not. Why is that? Well, in my opinion, part of the reason is there's been some distractions. There's been lots of other stocks, industry sectors, and bubbles to put your money in 2024 that went up significantly other than something as boring as gold. Artificial intelligence here, approximately $23.8 trillion of market cap. But with the markets having a bit of a downturn right now and people looking for a little bit more safety, I'm starting to wonder if some boring gold stocks won't catch some investor attention this year. So here's a couple of gold companies for you. Company number one and company number two. Market cap has gone up from 24 million to 40 million for company number one. However, valuation has trended down. Company number two, also market cap up from 168 to 229, while valuation has stayed the same. And I actually love this type of setup. This is telling me, at least on a brief look, that this company appears to be executing. These company shareholders are making money as their market cap is going up. And in the case of company one, with their valuation going down, as this company executes and as the company shareholders make money, they're actually getting cheaper. And the price of gold just seemingly keeps going up. Will it crack 3,000 at some point? Okay, so that's the reason I'm making a video on gold stocks, to get you excited for the next couple of boring companies. The first company I'm going to introduce here. And again, not financial advice. I'm not a financial advisor. I'm not your financial advisor. I don't know anything about you. I don't know your experience levels, your capital that you're working with, your risk tolerance. This is how I invest. I like to talk about it. This is not how to invest. Orbit Garant Drilling, trading on the TSX as OGD. This is a mineral driller and not just a cheap, tiny little surface drilling company either, right? They have underground drilling and they have specialized drilling operating in Canada, Chile, and Guyana. The reason this company is interesting to me, they offer some diversification and safety in a pretty challenging market, not only with their diversified drilling services that I just showed you, but also they have a 66% exposure to gold. Gold prices are going up. 34% exposure to other base metals, mostly copper, as well as they have a weighting towards major and intermediate mining companies, not tiny junior miners. So a strong diversified company drilling for gold and other metals in a time when the price of gold and other metals are going up. This is their Q2 numbers with some things to point out. Why this stock has struggled recently while gold has gone up is they had unprofitable and resource dragging operations in West Africa that they recently pulled out of. Pulling out of Africa has caused their revenue to stagnate a little bit, up 0.2% year over year. But if you can ignore that just for a moment, everything else looks outstanding. Leaving Africa has significantly improved their margins, driven them into fairly attractive profit levels and cash production. Their margins are continually improving because every year they manufacture new computerized monitoring and control technology drill rigs. Companies are fighting over these drilling rigs because they are much safer, especially for underground drilling projects. These are turning out higher utilization numbers at better margins. I believe they have 46 or 48 computerized rigs out of their fleet of 188. So a long ways to go. And if you look forward even 6 months, which isn't that far into the future, assuming they can continue operations like Q1 and Q2 of 2025, they are moving from a significant EPS loss into potentially 24 cents EPS on the year in 2025. Can they get more? And that Maybe more revenue is really the question. With gold prices up significantly, with more of the computerized drilling rigs getting manufactured, it's strange to see that a gold drilling company with no revenue growth this year. Can that change? Can Orbit grow revenue again? This is Agnico Eagle. They are a Canadian-based senior gold mining company. They are the third largest producer of gold in the world. They are trying to become second, and this is probably Orbit's largest customer. Agnico just provided 2025 exploration plans, a budget, and their budget for exploration has increased somewhere between 2.8% to 9.9% for 2025, and last year they went over budget. In addition, mining companies listed on the TSX and the Venture Exchange in Canada, they raised money, $10.4 billion in 2024 compared to $7.6 billion in 2023. Again, will Orbit see increased revenue growth from this type of capital? And while that seems beautiful, and again, that's all the potential rewards and everything that's going on well for this company right now, there's always risk. They have significant debt, right? I list all the debt here. They have long-term debt and lease liabilities of around $31 to $33 million. As well as recently, the former CEO, who just stepped down amicably in November of 2024, is selling 1 million shares of his 8.8 million shares, either open market or private. We don't know yet. He says the sale is for personal reasons. He still owns 21% of the company. Now, this usually wouldn't worry me so much because I don't mind when insiders sell shares. This person is probably retiring. The problem is we are in a weak overall stock market right now, and this is not a company with a lot of volume. I list their volume on the right side of this slide. Average volume is around 64,000 shares. So selling 1 million shares into the open market, that's about 3 full weeks of trading volume. That seems pretty difficult. I have to wonder though, is that the opportunity? After share price rocketed up to $1.33 Canadian, I thought I missed out on this stock. Now with this trade war chaos, with a former CEO selling shares, how low does share price go? And if share price does drop based on nothing to do with the financial fundamentals of this company, which look to keep improving on fantastic gold prices, what kind of opportunity is this? So that was OGD, Orbit Garant. Let me know what you think down below in the comments. The second gold stock that I'm introducing today, Dynacor Group, with share price up 35% on the year. Their valuation is really unchanged. Is there opportunity here? Dynacor is not a drilling company like Orbit. They produce gold. They remained among the top 10 main gold producers in 2024 with operations in Peru and a head office in Canada. Why should I invest in Dynacor? Well, I am a microcap investor. I like stocks with growth, and they say they have a well-defined growth strategy saying they're targeting sales of US $1 billion by the year 2030. This chart is trailing 12 months, so not only has the company been executing, trailing 12 months, their revenue has been growing, their net income is growing, their EBITDA is growing. In the past 12 months, they have $277 million of revenue. So they are saying that they expect, or their goal is 260% growth over the next 5 years. Even if they miss that target a little bit and 6 years, it takes them 6 years. That's 260% growth in 5 to 6 years. Growing revenue, growing EBITDA, growing net income. Look at their compounded annual growth rate here at the bottom. This is looking pretty attractive. Going back to this, why should I invest in Dynacor? They have some other significant things that you might like, right? 13 consecutive years of profit, debt-free capital structure, consistently increasing dividends with 6 increases since 2018, and an active share buyback program. So growth and a well-run business. Up 35% in 1 year, but as I record this video, down 12% off their 52-week highs. I think their dividend is now around 3% or close to it, with 6 increases since 2018. And of course, gold prices are still high. 2 gold companies, one a gold driller, one a gold producer, both look to be fairly solidly run businesses. Small microcap companies, 39 million and 229 million. take your choice. I like both of them. I'm happy to introduce both of these companies to my channel, and I wonder where can they go in 2025. You've been watching Common Sense Investing. My name is Cameron. As always, thank you for your time.